Good day. This is the Elliott Wave Weekly Update for the S&P 500 being recorded on Saturday, November the 16th, 2024. I'm going to start here on the cash market, and as always, I'm going to begin with a review of the big picture, or the largest degree that I am counting in motion right now, and that would be the primary degree. And I believe that the market remains within a primary fifth wave up, and that wave began on in October of 2022 at this low. So within primary wave 5, it'll consist of 5 waves of intermediate degree, of which waves 1 and 2 are finished, and wave 3, intermediate wave 3, getting continually closer to also finishing. So within this intermediate third wave will be 5 waves of minor degree, labeled 1, 2, 3, and 4. So we are in minor wave 5 of intermediate wave 3 of primary wave 5. So within that, there are going to be 5 waves of minute degree, of which within minor 5, which we have 1, 2, 3, and 4 complete. We're in that minute wave 5, and that is where the market basically continues to move forward and became questionable last week. So I'm going to jump down pretty quickly to the 4-hour chart and go over some details of what happened inside here. Now, the first thing you're going to notice is I have brought back the box. And previously, we had this box labeled in the orange color because there was a question as to whether the minor wave 4 was complete or still had an additional down wave. Well, that was answered. And so now we know that minor wave 4 did complete at the August lows. So we remain within the process of completing the minor fifth wave up to complete that intermediate third wave. And as I've discussed previously and will state again, Elliott has taught us, or continues to write and teach us, that a fourth wave will find its terminus, its endpoint, within the price pattern of the fourth wave of one lesser degree. That is the minor degree. So here we have minor 4. So once intermediate wave 3 is complete, whether that finishes at 60.25 or whether that finishes at 61.28 or whether that finishes at 63.44, the market would still be expected to decline back towards the August 5th lows, the previous fourth wave of one lesser degree. We're finishing up an intermediate third. We're looking for intermediate 4. It's going to find its low, or its terminus, its endpoint, closer to the bottom of that minor fourth wave. And once it's complete, I'll be able to add the fibs for that intermediate fourth wave. But we need the endpoint for the intermediate third wave before we can determine that. So here we are inside the minor fifth wave. I have 1, 2, 3, and 4 done. There's been lots of conversations as to exactly where all of these price points did complete, but I'm leaving them pretty much the same as I've had them now for some time. So now I'm going to come down to the hourly chart, and now we're going to look right inside. There's the minute wave 4, and so we're inside this minute wave 5. Now, I had counted this a little bit different previously, counting it as wave 1, 2, 3, 4, and we were in the minuet fifth wave, or the minuet fourth wave, let me say. And so to put in that minuet fourth of that minute fifth wave. Now, the corrective process has gone too far, not invalidating this particular count, but just went down too far. It was too big to correspond with what we'd already done. Now, I realized that, and I also kept it alive all the way through Friday. So as of last Thursday's analysis leading us into Friday's market, Still was looking for the completion point for the minuet fourth wave. While we gapped lower, we continued lower. We actually, in terms of the fibs, which pretty much remain almost the same, a little bit different, but pretty much the same, we were getting towards that beyond the 50% range and towards the 618. Now, a fourth wave is very rarely ever going to be 0.618 of the third. That's pretty big in terms of just the scope of what we look for. And so more common for a fourth wave is 0.382 on the fib level. So that being blown out and the market just really declining pretty heavily on Friday led me to reassess where we are and what actually has taken place prior. Now, I discussed this, I believe, a couple days last week, that one of the alternates that I had was that what we finished here, and that would have been at the November the 11th high at 6,017. That's for the SPX, the cash market, was only minuet wave 1 of minute wave 5. And so I have marked it that way. So this is now going to be front and center alternate, but there remains the other alternate that I also discussed last week, in that the minute wave 5 is complete at that high. And that what we're beginning is the start of that intermediate fourth wave. So in other words, if we indeed finished minute wave 5, minor wave 5, and intermediate wave 3 at this high, then we are indeed starting to drop lower in an intermediate fourth wave. Now, what works against that is that I basically would still want to see a quick impulse down. Here's the impulse, but it's the position that it's happening in. So it's kind of ABC A, ABC B, and then 1, 2, 3, 4, 5 C. Now, that being said, I continue to look at, I need to change one thing, by the way. Just bear with me 1 second. I'm going to activate that because it's not going to be there. It's going to have to move down to there. Or did I? Nah, hold on. I'll just leave it alone for right now. And yes, I did do it correctly. It's there and then down to there. Okay, so what we're looking at inside here is an ABC down. So that begins to weigh towards that high on November the 11th, finished minuet wave 1. And what we're working on is minuet wave 2. Now, where are we within minuet wave 2? Well, still, we have an A and a B, and now we're looking at that C wave, and I have 1, 2, 3, 4, 5. So wave 5 still yet to come in. And what this could end up being is just a very small fourth wave, small 4 of C, this C wave, and then we're going to come down one more time. Now, we just barely budged underneath or broke below the 50% retracement at 58.56, with Friday's low being 58.53. So then we close back above it. So I'm leaving open the potential that we have one more leg down to do, and that should bring us, now if we just map it out, that wave 5 as compared to wave 1 would suggest that we get down to 58.23. The 0.618 for the wave 2 comes in at 58.19. And so that becomes a little bit of a cluster and could likely just complete the move. Then an additional slide a little bit lower, like 1.618, where wave 5 would be 1.618 times the length of that small wave 1, would bring us down to 57.90 or 57.91. So I'm leaving these in parentheses because we're still looking then for that completion point of the C wave and then the minuet wave 2. Now I know that these changes, people say, oh, you just roll it into something else, you change it. It's like we need to understand that as long as this market is in motion, and that's what we're trying to count, that it has to remain more fluid. We have to remain more open to the possibilities that, well, it's going to change because we're trying to forecast out what this move can do. And when it starts to break the levels that should contain it, well, then you have to move to the next picture, the next alternate, or that's how I term it, the next alternate on what possibly is unfolding, which is why I'm giving you two. And I basically all last week was giving you at least one alternate, which suggested that minuet wave 5 along with minute wave 5, minor wave 5, all completed at that November the 11th high. Now that remains in place, but it's not the first alternate. It turns into the second alternate because if we're going to leave this as minuet wave 1 and this is minuet wave 2, then what we're suggesting is that there's still a nice rally lying ahead. And I'm feeling that that still remains the case. The seasonal charts have not really changed and still suggesting that we're going to have a continuation of a strong rally to the upside until probably at least the first week, maybe the second week of December. So what do we have coming? Well, we have a continued possibility that NVIDIA will save the market, so to speak, and the earnings will be very well received and start to produce a stronger rally, which should then spill over into other Mag 7, so other chip makers, other AI stocks, that they'll all get that lift, plus just the general lift in the market, which might then drop us back into that year-end posturing. The expiration that took place on Friday was, according to what I read, the largest November expiration that we've seen for a number of years. So, and that's also very possible. And as I pointed out, there were a lot of price points along the way that that were showing that there was a lot of options traded, a lot of open interest, and then that then plays into the other information that I use, and that is the information from Spot Gamma. So that's going to be on where the options flows are and where put walls, call walls, volatility triggers, where we get triggered into risk on, risk off type trading. And what happened right here was the big switch from positive gamma to negative gamma right into that expiration, right into Friday's expiration. So that's really, in my view, what started to produce that harder, stronger selling that we saw on Friday, that it became almost relentless, where the market just continued to sell, continued to sell, continued to sell. And primarily because we were moved quickly into a risk-off type of an atmosphere, plus it was a negative gamma. Now, negative gamma will produce that type of selling. So, and what helped that along the way is triggering a volatility trigger and also pushing through put walls. And as I mentioned last week, a couple of times, that what I had noticed, particularly in the ETFs, and those would be the spiders and the Qs, where the whole range, so between the call wall, the put wall, and the volatility triggers, was particularly in the spiders that I saw, it was 10 points. 600 being at the top for where the call wall was, and 590 on the bottom as to where the put wall was. And you can see that the ES closed at just below or just above 5,900. So that call wall was way above, I believe it was at 59.27 or even a little bit higher. So we closed substantially below it. So that's the effect, the constant getting out of positions. Now, being a large expiration, just I think accentuated it, just kind of brought a lot of attention to it, and a lot of changes needed to be made, and positions were either closed or changed or rolled or whatever the situation may have been. So, and also, which is just a product of a larger expiration, that there's a lot of gamma that just goes away. It evaporates because the options have expired. So all of that is released. And then what can happen coming out of that is a volatility pop. So we can kind of see that we started to get that. The volatility moved up pretty strongly on Friday. So we were seeing that in advance. And that may continue or it may not continue come Monday when the markets restart. And it's going to be interesting to get the new levels that are going to come in as all that gamma is left. And now much of it may have been rolled out to the next week, next Friday, or even later in the month, or moved out into December. So we get, I don't want to say a reprieve, but I think that we'll see where the levels will be. Hopefully, what I'm going to see is that they start to space out a little bit more, which gives the market a little bit more flexibility in terms of movement instead of it flipping so quickly. And I shouldn't say so quickly, but it flipped from a higher level into risk off. So sometimes if that level is still sits below the market, it gives the market more room and flexibility in terms of correcting, in terms of just pulling back a little bit. But when it pulls back and it's constantly triggering volatility trigger or moving higher and triggering levels, then it just pulls these algorithms into action for risk on, risk off. And so, risk on is they're buying, risk off is they're selling. And so consequently, we get to see that in action, particularly to the downside. When that volatility triggers to the downside, and produces selling, it can be very relentless. Now, don't get me wrong, because here it was triggered to go up, but it was already in place. Risk on never really kind of went away. It still was there, but it just accentuated it in the gap. Plus the fact that that was the election bump, continued to just produce risk on type trades. So again, this gap flipped it back to negative. And so SPX, I'm looking for the possibility, or I believe that we should probably come down one more time, at least below the 58.53 low that we saw on Friday. And our support starts at 58.23 down to 58.20, 19.20, and then it drops down to 57.90. So a break below 5800 may shake it up a little bit, but we'll see how these numbers are going to line up for Monday. Okay, so let's go back out to the daily and just look at the SPX in terms of where our moving averages are. Well, you can see that the 8 has turned lower, the 20 has gone flat because the market did break it. That gave us a little bit extra of a push, but we got back up and basically are closing right above. The close was just below that 20 moving average of 58.75. So if we continue lower, this may just crest and start to turn lower. The 50 will go flat. The 200 is going to remain kind of at a slight angle, but a continued drop is going to push this into being a support level because it will just start to move sideways. The 50 will start to move sideways. That should do its job in terms of giving support, providing support for the S&P. And that would come around 57.65. So unless we see and again a hard sell coming in starting tomorrow when Globex opens, and then again on Monday, my call is going to be that we find our low, we create a new low for the sequence, put in the wave C, put in the minuet wave 2, and then we start to rally. Now again, what we'd be looking for from that rally, if it's the beginning of a third wave, you're looking for some power. You're looking for some power buying where they're done and they're now reestablishing positions. Basically, that's how I would look at it. They're reestablishing positions and we pop back above a volatility trigger. That will add to it. But I would be looking for a strong impulse type move off of the low that would be created when we get to the bottom of this very small wave C, and then, oh, actually it's pretty big, but wave C and then minuet wave 2. All right, let's go over to the ES and take a look at what was going on there. Now it's a little bit different, but not all that much in terms of labeling. Again, here's the box that I have for the intermediate fourth wave. Now, again, here as well, whether it's going to finish up at 6250 to 6280 or all the way up above 6300, and then that window or small cluster goes from 6361 to 6420. These are possibilities and all within that minute fifth wave. So essentially in the SPX, we're going to see probably before the end of December, if this is the case, where that JP Morgan collar is going to get challenged. So far, hasn't yet. Okay, so here on the daily, which is pretty much where I'm going to start, is that we're still in that minor fifth wave. We still are within the minute fifth wave, but like in the SPX, the change came with, and let me bring this down right to the hourly chart, with this intense rally that we had, which really started on election day and then just picked up speed post-election and continued and brought the market up to a high at 60.53. Now, before I had labeled it, and it did seem a little convoluted because of the intensity of the rally, that I had labeled it 1, 2, 3, and this was all going to be a fourth wave. Well, same borders, same definition applies here as in any fourth wave. It got to be too big. It got to be too steep, and it started to break levels that it should not have broken. And granted, it didn't get to the 618, but it started to just, it's too big in comparison to what we were considering to be the second wave. So that one, yes. And I'm even now, acquiescing to that, even though one of the things that I've noticed with Elliott is the fact that we're getting a lot of extended patterns in fourth wave position. And that they're larger, they're extended, they're just, when we have to make a comparison between wave 2 and 4, they don't seem to match up anymore. And I think that's just a product of what's going on with all of the algorithms. So we're more dependent, well, not more dependent, algorithms are what is control of actually executing a lot of trades. So when they're done, and they get executed, and that produces the moves that we see. And that's why we're not dependent, but I lean on the data that's provided by Spot Gamma for call wall, put wall, volatility triggers, and a lot of things that come in between where these large gamma positions are sitting. And that gives us an indication of where traders are lining things up, long and short. So when they get tapped, when they get broken, we will get a reaction from the market because options positions need to be adjusted. So, and more on that it's always available, but to start adding it here, not going to do that. So, but in any case, what we ended up seeing again on Friday, it actually happened on Thursday, is that the market broke below the volatility trigger. That shifted the narrative coming into Friday that it was risk off. And then on top of it, it was an expiration. And on top of that, we saw some major downturns in some of the stocks, particularly Meta, Microsoft, AMAT, which reported earnings on Thursday, and earnings themselves were not bad, but the forward guidance just really just kicked AMAT in the teeth. And so it dropped pretty heavily. Apple, battling to where it was going to get pinned for expiration. And so it had call walls just above, and then it had put walls just a little bit lower than where we ended up. So those battles took place all day on Friday. And then again, the adjustments became very noticeable with the gap lower in the index itself. All right, so here in the ES, we're same position. If I'm going to say that this is minuet wave 1 of minute wave 5, number one, it starts to conclude that we are very likely, right? If we got 1 and this is 2, then we got a 3, that we're likely going to end up in here. These sort of take over as the areas to where we may finish. And again, I'm thinking that we may finish this towards the end of the year, towards the end of 2024, or right at the beginning of 2025. We have seen this many times before, where we might sell off a little bit, but then we rally strongly. Year-end rally picks up, and it really carries the market to new highs. And the last one that I remember pretty cleanly, 2021 turning into 2022. We began 2022 basically at the highs. And then we spent the next 10 months, which is right from January to October, declining. We reached our low in October of 2022, and then this rally takes off. So it's been in motion for 2 years plus a month. So what if it takes us to January of 2025? It's not going to be it's in motion for 3 years, because we have to go a little bit cleaner. It's just in motion a little bit over 2 years, 2 years, 2 months. And then we finish minute wave 5, minor wave 5, and intermediate wave 3, and we begin to decline again in an intermediate fourth wave. Now, whether that's going to end up being a very quick drop lower, as we saw back in July and August of this year, when we put in minor 4. I personally think it could take a lot longer. I think then we'll follow, intermediate fourth wave will start to follow a little bit cleaner on the Fibonacci time sequences. And so we'll be looking at something like maybe taking it out into October again, October 2025, before we then flip and we start to move up in an intermediate fifth wave. That's still, in my mind, out there waiting to happen, and it should. Now, there are a lot of things that can come in between and blow that one out the doors. So we'll have to wait and see. We'll have to wait and see what actually is going to happen. So on that basis, we may get a very quick intermediate 4 and a very quick intermediate wave 5. We have to wait and see what the market's going to do. But if we had both in our minds as possibilities, then we're not really going to be all that surprised, which is why I'm always going to present two sides. The bullish side, the bearish side. It's like where the market goes up, the market goes down. And on the Elliott, that would fit that. So this alternate slipping over to preferred simply because of how hard we came down and how large this move is ending up being. Now, being that this may be, and I'm labeling it as such, so minuet wave 1, and we're getting ready to complete a minuet wave 2. Again, same deal, A, B, and then we got 1, 2, and then we break. So it's 1, 2, and then 1, 2, 3, 4, 5, 3, 4, and we come down in a fifth wave. So our first line is 58.70, which is just not all that much of a new low. The current low is 58.76, so 58.70, 71. It's a possibility simply because of the fib level. But here's the small cluster that I think. For minuet wave 2, it's 0.618 of that minuet wave 1. That's pretty common. So 58.50 or 58.49 right in here. And then with a little bit of overthrow, we could get as low as 58.40, I'm going to call it. So I'm going to say 58.50 to 58.40 should complete wave C, and then that minuet wave 2. Same deal. Once that low is in, I'm going to be looking for similar how it started. You see how that started on the hourly chart? That was kind of impulsive, but then it stopped, probably because the market closed. So if we get a continuation, like tomorrow, that the market opens and they just start going for it, they start buying, then it's going to be it's not going to be all that hard to conclude that that wave C is done. We did come down, and I can push this to the whole thing is like 1, 2, 3, 4, 5. I'm letting that third being a little strange, but still it could. I'm giving the benefit of the doubt to the market still needing to put a new low in, which could just be the the adjustment still. Now that everything, the expiration is done and all the things have been calculated and everybody's been delivered their position, they may need to adjust. And we may see that tomorrow. So in other words, when Globex opens on Sunday, in overnight until Monday, we might get that downside move, finish this, and then start up. And that might produce a little bit of a strange pattern for the cash market, but I think we'll live. Now, so here we have it. There's the window. And actually, I do think 58.50 down to 58.40 could complete it. We have continuation. I'm using 882, and I'll tell you why I switched from 0.786 to 0.882 is because that's what the algorithms have done. And from my research and from what others are telling me, that it is 88.2 that is getting programmed into algorithms for moves, both up and down. Okay, so that's going to be about it for the S&P. Again, a little bit lower, we put in that minuet wave 2, and then we start to look for a stronger impulse, one that will carry us back above the 8, back above the 20, and start getting close to here. We got the 50 on the hourly chart, folks. We got the 50 challenging the 200. And once it does that, this market is in a downward move. And if it breaks and gets clean, then it's going to suggest stronger, which is why I believe if we come down and finish it here, it may break, but I think then it turns. I think it gets caught and we turn higher as we complete this. The other side of this picture is that, again, as I said in the cash, here as well, we have to leave open. It is now alternate 2 or still the alternate, and this being the preferred, that it's all done. That the minute fifth wave, the minor fifth wave, and the intermediate third wave completed here. And we're in that beginning stages. Not the best looking launch, which is why it remains kind of on the shelf. But as I've said so many times, stranger things have happened in our markets. So what's going to kick that? Well, it can't break below 57.25. I wouldn't want to see it below 57.60, even if I have to say that this is a very small wave 1 versus this being wave 1. So again, we below 5,800 turns it more negative. Below 57.60 turns it way more negative. And that would then suggest that we're dropping in the initial stages of an intermediate fourth wave down. All right, that's where I'm going to complete this, get it published. And the next daily, Elliott Wave Daily, will be on Monday, November the 18th.